Hello, everybody. Welcome to Friday. Welcome to the Rebel Income Insights live stream. Excited for the day and for this session, as always, and for the opportunity to kind of go over some of the stocks we've been following, the trades that we've been placing, and look at what's happening in the market in real time. Really excited to see everybody here. A couple of notes here. You can interact with me in the group using the chat area. I pay attention to that throughout the course of the live stream, and will respond to questions and comments there, and that'll help to make this a little bit more interactive. So feel free to post comments and questions there as they come up. If you like some of the things that you're seeing us talk about, of course, you can always like the video. That's always useful for the YouTube algorithm. Also, you can post reactions in the chat area. There's a little emoji icon there, and you can post some of your own emojis or reactions to some of the different things that you're seeing. I've just gone ahead and thrown a few of them myself just now. So just a couple of things that if you like, you don't have to, but they certainly they add a little bit of interactivity and fun. Welcome, Jay, and to Gib, who are here and posting comments. So really appreciate it. Let's go ahead and dive straight in. It is the second Friday of December. So the great thing about the options market is, since there are weekly expirations, there are always opportunities to there's always opportunities to review what's happening in the market, compare them to the positions that we're following, and evaluate what's going on. Even if there are trades we don't have on deck for expiration, it's always a good thing to make sure that you're checking in on how those are going and making decisions about what that means for the position that you're in, the trade that you're managing. So we will go ahead and get started here by taking a look at Delta Airlines. This is a put sale that I placed the last week of November. This was a 2-week trade, roughly, selling the $61 put and bringing in about a little under 3% for that trade, which was kind of nice. Um, A little bit higher than normal for the normal kind of put selling, since where I'm usually trying to target is about 1.5% average yield per month. That's not per trade. That's just over a 1-month time frame. If the yield that I'm seeing is around 1.5%, then I consider that a really good candidate to take a look at. So with Delta here, we had implied volatility on the stock. It has been a little bit higher for the last several weeks, and that created an interesting income opportunity. So we can see since then uh, some really positive momentum, obviously, but my put sale was done right around. Whoops, sorry, that's not actually right. That's the end of October, but here at the end of December, right around. Oops, that's a really ugly line. Sorry, I can't control this better. That's a little better, not much. Stock was right around this area, and we've seen a clear rally upward from that point. So this has been a trade that has worked out obviously pretty nicely. Um, it's unlikely the stock is going to fall back by about $10 between now and the end of the session today. So this trade is going to expire worthless. That also generally means that there's opportunities to evaluate whether or not to try to close a trade early and possibly roll your money forward, keep it working for you on an increasing basis. And maybe Delta isn't the one that you would want to do. Maybe it is. Maybe you want to keep working with Delta. But let's take a look here. I'm going to need to expand my strike prices by quite a bit. Maybe not that much. All right, here we go. All right, here is the contract that I sold. Now again, for context, brought in $1.72 on this. So here's 61. The asking price right now is 51 cents, which is really interesting considering that this is the day of expiration for this contract. And we can see some interesting numbers for these deep out of the money put options. Just means that there's really been next to no activity on these. Last trade was a penny here. So this certainly means that given the distance, if I wanted to try to buy this option back, there's fair chance that I could put in a buy to close order for about a penny. I might have to wait for the market to come to it because there's been no volume today. There is some open interest there. There is enough open interest, Gib. It's about 490 contracts, and usually that's enough to give a contract plenty of liquidity. Jay's out of DAL already, so that's fine. Already took yours, moved on. Jay, I'm still in mine, so you got out earlier. So be it. That's awesome. Congratulations. You win. Which is good. That's a good thing, right? When you if you have an opportunity to close it out earlier, then that means that you have an opportunity to reevaluate what you're going to do with that capital. Um, yeah, sold a put a week in November, made $2.36. So you also beat me in terms of premium, which is even better. I love that when you're able to do it. Um, open interest, though, is interesting. I'm usually looking for about 100 contracts in open interest in order to provide enough liquidity to get in and out of contracts on a reasonable basis. And usually, if you're in that neighborhood, even if volume is pretty non-existent when you pull up the options chain, usually if open interest is at least 100 contracts, there's enough interest going on that as long as your bid and ask orders, the prices you put in for buy to close or sell to open orders will usually have a chance of being taken by the market. Um, like I said, sometimes that means you have to wait. Um, And sometimes so I've seen just as many cases where just like this, where there was no activity, very low open interest. I put in my order and it went lickety split, no problem. So yeah, I totally agree with you there, Gib. The spread the spread between the bid and ask is a little bit alarming, right? That's unexpected. And this is a function of no volume more than it is no open interest. If you see no open interest and no volume, then that's another thing altogether. Then that spread even usually will widen even more. So as this is the other interesting part about this is just the movement of the stock itself. Maybe there's an opportunity here to close out this trade early. But even if you did it, say, at the beginning of this week, here's Monday right here. The stock's at 66. Now it's all the way at 77. With this kind of liftoff, here's the last significant resistance level was around 62. Sorry, I'm drawing really ugly lines today. Um, the last level of resistance was right around 62, and that the stock has really it's kind of gone parabolic since then. It's really been accelerating its bullish momentum. Um, that begs a few different questions. If you wanted to close out the trade earlier, as to what you're going to do next. Are you willing to continue to work with Delta at this current price? These kinds of rallies, I say this all the time, these are a little bit like overnight gaps like we had here, where these tend to be hard to sustain. It's pretty ordinary to see a stock when it has this kind of momentum. At some point, it's going to drop back because it's really hard to stay parabolic like this for very long. So these kinds of retracements become pretty ordinary. That doesn't mean they're a bad thing, but it does mean that placing a trade right now with the stock in this range begs a question of whether or not it might be about to top and possibly retrace a little bit to find a new level of support. It may not fall all the way to this last resistance, which, the technical convention is that previous resistance becomes new support, right? So could it fall all the way to 62? Yeah, sure it could. I'm not sure that it would. If it does start to retrace and draw down a little bit, it may, excuse me, it may come down roughly to maybe the 66 level. Maybe it splits the difference between where this resistance was and where the stock's current price is. There's a little bit of pivot low activity here around 66 as well. So that could be interesting. Um, the reason I'm pointing this out is if I'm trying to think about a new trade on Delta, I'm not sure that right now, technically speaking, is the optimal time. I'm not always trying to time my trades when I place a put selling trade, but when a stock starts to go parabolic like this, I do think twice, not only about the value proposition in the stock, and if my value target price is $100, whatever, maybe 71 doesn't scare me, but this technical setup right now is going to make me stop and think and really decide if that's something that I'm going to be willing to do. In the meantime, if you were to decide that that's worth it, let's shorten this up a little bit. We have the stock a little bit above, right around 71.50. And so that means, boy, this is interesting. Implied volatility here is still pretty high because you can get $1.22 for 1 week on this. This isn't a recommendation to buy or sell. Obviously, I'm keeping my coward's door swinging, but that's an interesting premium that's available for a new put sale that expires in only 7 days. Like I said, the concern here would be if it does pull back, you may be at there may be an increased likelihood or chance of being assigned, which I don't mind being assigned if I think the value price is right. Um, I would be a little bit concerned about it again, just from a timing standpoint, because if you do get assigned, you have to be willing to wait until it cycles back up, and sometimes even from a simple drawdown or retracement, those recoveries can take some time. So it's something to think carefully about. Even so, $1.22 divided by 71, you're looking about 1.71% for a 7-day trade, which is interesting. If you annualize that to 52 weeks, obviously you're looking at a very impressive overall potential annualized yield. That's a little bit hard to predict or anticipate, like I said. The other thing that's interesting about Delta here is look at the consistency between bid and ask prices. 50 cents here, 70 cents, a little over 70 cents here, and here, and here for 2 weeks out. So you got some pretty wide spreads right now between these bid and asking prices. Now we're more like, here's about 75. Here's a little over 90 cents. So these are interesting, and I'm not sure exactly what that implies about, just, yeah, limited volume. There's high implied volatility, just not a lot of volume on these. So these trades may take some time, and when I say time, it might mean hours. If you were to work with the prices that are listed here, it may just be a matter of waiting. Yeah, not a ton of open interest here, to say nothing of volume. So these are probably these prices are probably gettable, but you may have to wait for the market to come to them a little bit. That distance, I'll be honest, if I'm trying to think about what I want to do with Delta next, it might be move on and wait for some signs of stabilization, consolidation in the price, whether it's around the stock's current price, around 71, or maybe a little bit lower if it does start to retrace. All right, that's Delta. That's also the only trade that we have on deck that is set for expiry today. So the other opportunity that we should be taking advantage of literally every day with these trades is to make sure that we're checking in on them and see what the market is doing. And Jay said that he was already out of Delta, right? That's exactly the reason. If we're paying attention every day, you have an opportunity to be a lot more volatile, or excuse me, a lot more nimble, not volatile, a lot more nimble than waiting for expiration day when the stock is $10 above the price that I sold, right? So with that in mind, let's take a look at some covered calls and put sell. Let's start with the put sell that we placed last week. This is on Target. And this is probably one of the only real big box retailers left after Walmart in the United States. And so they're interesting. They're also not priced as high as Walmart. This was a put sell that I was able to place in the first week of December, last week, selling the $89 strike price and bringing in 1.71%. Again, this is a 2-week trade, so we're only a week in, but the stock's current price gives us an interesting opportunity to analyze and see where we're at. So again, kind of like what we just saw from Delta, seeing some nice bullish activity here. Target looks like it's actually breaking above the 200-day moving average, which, considering the strength of its downward trend, this thing is in a downward trend that has been going on for a while now, going all the way back to the last quarter of 2024. So this is a year-long downward trend, and we're seeing it start to show some signs of life as it pushes above that 200-day moving average. All right, Jay, we will take a look at your Nike trade for sure. All right. So we're seeing some nice momentum here at this current price. My put sell is all the way down here at 89. So again, just like with Delta, I'm not really in any danger here. But since I have a week to expiration, this liftoff, Jay, Jay's 3 for 3, man. Yours was lower. He's at 87. Nice. I like that. I like it a lot. And you bought it back yesterday. So again, there you go, Jay. Still in it, but there is an opportunity to think about doing exactly what Jay has just talked about. So here's target. Again, not a recommendation to buy or sell any specific security. This is just for educational purposes primarily and review. But hopefully this helps you to make some decisions about what you would do with your trade. Going to have to expand this a little bit to get to. I'm still not there. Go to 24. There we go. All right. So again, for perspective, brought in $1.52 on this. There's $1.52, and here's my $89 strike with an 18-cent asking price right now. So if I take away that 18 cents, right now I would keep $1.34 of that premium. That's actually really attractive. Anybody in our group who is an active roller and manages their trades like Jay did by buying it back yesterday would look at that and say, this is an opportunity to hang on to more than 80% of the premium I brought in. And that's a smart way to manage your trades, especially if one of the differences between what I do versus what maybe other people in our group do. I don't avoid assignments, but maybe your preference is to try to avoid assignments as much as possible. Maybe that's one of the things you factor into your system, which means that you're automatically going to be managing your trades on a more active basis. Well, that's fine. There are people, and a lot of people in our group, in the Rebel Income community, a lot of people I know who are focused on income generation, even outside of Rebel Income, that use put selling and these kinds of income generating strategies in a different way. They use them as ways to time trends. As stocks experience these short term rallies and drawdowns, they are managing their trades accordingly. And so this could be a really effective opportunity to do that, and then decide what you want to do next. Again, looking at the details on the contract, there's enough. There's plenty of open interest here and even some activity. I'm not looking, when I look at volume, I'm not looking for a minimum amount of volume. I'm just looking for volume. The big thing for me is open interest. If there's enough open interest, then I'm going to be pretty confident that there's going to be enough liquidity to make my trade move if I want to place one. Any volume that I see in addition to open interest is just kind of extra information, kind of gravy, I guess. This does beg a question, and Jay, maybe you can tell me what you did here. But the question is, if I buy this back, what am I going to do next? I put $8,900 on reserve. I sold one contract, so 100 shares, $8,900 at the $89 strike price to reserve this trade, make it a cash secured put sale. If you're working with margin, then you've got some combination of cash and margin reserve to to cover that trade. If you buy the option back, you get that capital back almost immediately. You can use it for another trade. Are you going to use it for Target again? Are you going to continue to work with Target? Are you going to, considering the distance that it's moved, here we're almost $9 above that or $89 strike price that I used originally. So are you going to go higher, maybe to a little bit closer to the stock's current price? And let's see, here we go. You know, if I go out to 97, let's stick with next week. Here's 97. Here's $1.35 on the bid for this one. Jay says, maybe you have to evaluate it again. You're absolutely right. Question is this good enough for you? Well, $1.35 is going to be a little bit under 1.5%, which I've told you is the target yield that I'm looking for when I place a put selling trade. The caveat for me, though, is to remember that I'm not looking for 1.5% per trade. It's just on an average per month. Gib, that's fine. If that's your minimum per trade, totally respectable. That's fine. For me, it's a little bit different. I'm just looking for an average per month. That means the 1.39% for 7 days is not so terrible. I think that the setup technically with Target here is just a little bit different than Delta. Even though we're seeing some of this nice positive bullish momentum, you know, here's the 20-day moving average has just started to curve upward again. And now we've got the stock breaking above the 20-day moving average. That means, or 200-day moving average. That means that the 200-day moving average should begin to offer support right around 96, maybe 97. That should act as new support. There's also a really good pivot high right here around the same range. Again, this is a really terrible line, but that basically lines up with about $96, $97. That means there may not be as much risk of seeing Target pull down or draw down, pull back, whatever the term you want to use is. It may not pull back as far as what you may see in, for example, Delta, if you were to place another trade right now. And again, if the value proposition is still attractive enough, and just to be clear, it is, even from 89, and with the stock now pushing near to 98, it's still actually pretty nice. That may be enough to maybe say that 1.39% for 7 days is not too bad. Again, if I annualize that, I'm still, here's 72, an opportunity to make up to about 72% per year on an income generating strategy. This is why I always just kind of shake my head when I talk to growth focused investors. I tell them what I'm doing, and they laugh at my numbers and they say, "Well, how much did you make in your last trade?" About 1.8%. They don't ask the next question. How long was that trade, and how did you set it up, and what is your system set up to do? Well, this is what it's set up to do. So there you go. Gib may have to watch Christmas sales numbers to be sure. This is one that, we're seeing some momentum that I think it is entirely reasonable to suggest that this momentum is being driven by the expectation of a healthy holiday shopping spree. And so, if those numbers come in lower, then this could easily drop back. This is certainly not a given even that we're looking at a reversal of the downward trend. This could simply be another consolidation at the low end of the longer term downward trend. I'm just saying that right now there's a lot of technical indications that are looking pretty positive, and more positive than more bullish than bearish right now. So okay, so that's target. That's interesting. The other trades that I have that are set for expiry next week are all covered calls. So let's check in with those. Let's start with SLB. This is a stock that I've held for a couple of months and been able to place a number of useful uh, trades on. Not only with my initial put sale, which was here in July, I was assigned at the beginning of August at 35. I've been able to place 3 or 4 useful covered call trades. So this is a really good example of the reason that I like taking assignments. These just often become really, really productive income generators over a period of months. Sometimes there's opportunities to do this. Just keep the income generation going, because the stock doesn't really it stays around the price that I was assigned at, but doesn't necessarily break out or hold a breakout. May just start to consolidate. So let's take a look at SLB. This one has been really interesting to watch. And just as I said, there's not really a breakout. Well, guess what? It's breaking out. So right now we're up here at 40. Here's my assignment price at 35 and my covered call at 36. Stock is $4 above that, so that means I'm in a good position to see this trade close with an exercise where I'm going to be called out of my shares at 36. This is also a really good example of one of the things you have to be willing to accept when you place a covered call trade. And that is the reality that you're putting an absolute cap on how much gain you're going to get out of the trade. Yeah, for whatever the time period is, you sell a covered call. If I got into SLB at 35 and now I'm selling a covered call at 36, it doesn't matter how much further above 36 the stock goes. That's the cap. That's the maximum capital gain that I'm going to see, plus the income from the covered call. You need to decide that that's okay. And in my case, I did. I brought in 91 cents on this covered call. So assuming that the stock is still above 36 in a week, I'll have that 2.6% in premium plus $1 of capital gains. So that'll be $1.91. That'll be the entire extent of it. Maybe the stock's at 45. I don't know. Maybe it's closer around 36. Maybe it's below 36. That is a possibility. I've had a couple of these where it looked like the stock was going to break out. My last one, in fact, I think I sold 37 on a little bit of momentum with the stock, thinking that I was going to give myself about a $2 capital gain. Stock dropped back and closed below that at the expiration date. That's okay too. Again, the thing to keep in mind is relative to where I've been with the stock. If I'm called out, then the net return on just this one trade is 5.45%. That is not taking into account every other covered call that I've placed with Schlumberger. SLB, excuse me, that is their former name, Schlumberger. Here's that $37 covered call that I mentioned, brought in 90 cents. I'm not going to do the math on all of the premiums. I did that last week, so I don't need to do that again. But when you add all of those up together, what you start to see is the benefit of being able to place these trades on a repeated, continuous basis, and how effectively they start to keep pace with longer term results in stocks. For every one of these where I'm having to give up, the difference between 36 and 40 over time, these tend to even themselves out quite a bit. So I'm okay with this. I do not mind the fact that there's extra $4 here that if I get called out, I've quote unquote left on the table. Yeah, whatever. Buying the call back right now, in fact, to try to hang on to that would probably be kind of foolish because of the distance that the stock has moved. Got to expand this again. Let's go to 16. Wow, that still wasn't enough. 24, there we go. Here's my $36 put here. $36 call, excuse me. $4.65 on the ask. Have to pay the difference between the stock's current price and the strike price here in order to buy this option back. The only reason that would be feasible, the only reason that would be make any sense any sense at all, is if the intention and the plan is to let the stock continue to run, that you really believe it's going to rally even higher than 40. And it could. But just like with Delta right now, the odds of seeing this start to drop back a little bit are starting to increase. In fact, if you don't want to take my word for that, let's throw up another indicator here. Come on. Yeah, it's not going to let me. All right. Can look at this with just about any other kind of oscillating indicator, stochastics or some of those, and we'll be able to see it. So let's, yeah. Let's see if I can get this. Nope. All right. I stopped paying for premium for a variety of reasons, so I don't have as many indicators here. That's okay. If you pull up any kind of oscillating indicator here on SLB, then you'll be able to see what I'm talking about. Okay. Let's go ahead and move on. The other covered call, one of the others, I should say. The other covered call is on Halliburton. And this one, we'll see if this is holding up as well. This is a stock I was assigned at 26. And so this is a covered call at 26.50, bringing in about 2%. Also, a 3-week trade on this one. So let's check in with Halliburton. Oops. Make sure we're getting the right one. There we go. Similar story here. Here's 26.50 roughly. This is where my covered call is at. This is where I was assigned. And again, we're seeing these stocks rallying quite a bit. So this is almost $3 above my current trade. So again, for Halliburton, for SLB, I'm giving up some gains here with my covered calls. That's okay. Remember when one of the catchphrases I guess I like to use when I talk about rebel income is picking the low hanging fruit of the market. That means picking up the money that is just available right now, what can be seen. What can't be seen is this kind of thing. This is the crystal ball kind of stuff that we would all like to be able to look into the future and be able to predict, but which is actually generally not so possible. And anybody who says that they called these rallies, maybe they got lucky, but these are really nothing more than guesses. So sometimes the timing, thank you, Barry, you're exactly right. Sometimes the timing works out. So in a year, it probably all balances. That's exactly the point. For every one or two of these, I'm gonna have a handful of these every single year. That's a reality. Um, every single year, I'm going to have stocks that have rallied so far past the strike prices that I'm working with that I'm leaving some money on the table. That is definitely true. But that's a handful out of what, 52 put sales every year, and who knows how many other covered calls. So we're talking about potentially more than 100 trades per year. So yeah, cannot get hung up on a single trade. Barry, I love everything you're saying. That is exactly the mindset. So this is all you can do is say this is good enough, and time to move on. So you're exactly right. I agree with you 1,000,000%. Let's take a look at this week's put sale um, just for context, and this was on FCX. There's a mining company that I've been working with lately and been getting some mileage out of. And selling the $44 strike price brought in about 1.8% for 2 weeks. I placed this trade on Wednesday. And this is like a lot of other stocks here right now that are seeing some impressive rallies as the market's momentum has been pretty solid. Here's where I'm at on my put sell. So we'll see if this pulls back at all, but it does look like it's in a pretty good position. In fact, even only just a couple of days in, it's already moved far enough that there may be an opportunity to think about managing it a little bit more actively. Barry, earlier in the year, you were on the wrong side of BMY, sold a call for less than I was in it for. Recently happened to balance out on that same company. Yeah, just stay consistent. Stay consistent and hold the line and stick to your system. If the system is good, if the system is based on the right kinds of principles, and I'm not just talking about income generation, because there's a lot of really good short-term timing strategies too. I just don't use them, but that doesn't mean they're bad, because they're not. If the system is good, sticking to the system is going to give you the result that you need in the long run. The caveat, the trick, and the discipline comes in being able to stick to the system. So what you're saying, Barry, is 100%. I completely agree with that. So, okay. So I brought in 79 cents on this trade. So let's take a look at where we are now. And let's see, we're 2 weeks. This is a 2-week trade. Oops. I'm going to have to expand this again. Let's go to 16. Good heavens. All of these are showing enough momentum. I'm having to really expand my options chains. Okay. So I'm already just a couple of days into this trade, Here's 44. Here's the bid price on this. There's a pretty wide discrepancy between bid and ask. So here's the ask is 29. I apologize, I called this the bid a minute ago. It's just really a function of the fact there's not been a lot of open interest, or not a lot of volume, I should say. There is plenty of open interest, though. So what does that mean? Well, if the bid is 6 cents and that's reasonable, there's probably an opportunity to try to manage the difference here between 6 and 29. Maybe if I wanted to manage this a little bit more actively, maybe I put in a buy to close BTC for 15 cents. Not a recommendation, just maybe an idea. Maybe I try 10 cents and see if the market takes it. This is one, since there's still 2 weeks to expiration, I'd be willing to wait for the market to come to my trade. So if you wanted to try to take advantage of this momentum already in FCX, and you were to put in a buy to close order, set the price that you want. You don't necessarily just have to take the price that the market is quoting you. I don't have to just take 29 cents and decide that I'm okay with the little over 40-cent difference. Now, to be clear, I could. That's not bad either. If I'd want to just move as quickly as possible, then I could do that, and that would be reasonable. I'd still be still hanging on to more than 50% of the premium that I brought in for a 2-day trade. That's not a terrible result by any stretch. I like the idea that this gives me the opportunity to set the price I want and wait for it. And if I don't get it, then I don't get it. But you know what? I'm going to go with the trade that I want. I'm not saying I'm placing this trade. This is just kind of the way that I might be looking at this if I were going to. So far, FCX is playing out just fine for me. So I'm going to hold this and let it see what happens. Okay, let's yeah. Now, if you did buy this back, it does beg the question of what do you do next? Well, maybe you work with the same 2-week period, but you simply roll up. And that means that here at the 48, stock's a little bit above that price right now. You got 73 cents available. I brought in a little over that 79 cents on my initial put sell, but 73 is not terrible. That's about 0.73 divided by 44, 1.65%. So still above that 1.5% per month threshold I'm looking for, and we're still working with a 2-week time period total. That would mean that whatever you kept from buying the current $44 contract back, you'd add that to your 73 cents that you could bring in right now at 48. And the combined result should be pretty nice. You're going to get a little over 2% for 2 weeks. Again, I'm not saying these are trades that you have to place. I'm saying this is what picking the low-hanging fruit of the market looks like. This is the stuff that nobody is expecting retail traders to notice. And when I say retail traders, I'm talking about people like you and me. So, okay. Well, that is all of the contracts. That's all the trades that I have. Got a couple to come back to. Let's Jay mentioned Nike, so let's take a look at that one. And I'm probably going to have to give you another mark. You're going to end up with 5 on the day, at least, maybe more. So again, this one's also showing some momentum here. Here's 68. And so you rolled that one, and let me take a look at Nike. Let's see. That was one. Okay. My last trade in Nike was at 62, and that expired last week. Stock showing some momentum here, coming up on its earnings report, which is scheduled for the 18th. So that means a couple of things. One, the analysis is not going to change at least for about another week. So everything from the October earnings statement is still applicable. The value proposition in Nike is still pretty nice. So if you like this one and you've rolled out of it, kind of like Jay did, maybe there's still an opportunity to keep that going. The caveat, and not everybody's going to do this, the question becomes, are you willing to hold an open position through an earnings announcement? It is very normal for stocks to pick up some extra volatility around an earnings date. And when I say volatility, I mean both bullish and bearish. That can be good from an income generation standpoint, but it also means they can be very, very unpredictable. Look at this earnings announcement in June. Here's a big rally up, and that's fun, right? But how about this one in March? Oops. Yeah. Here's a big drop lower that followed it. So these periods of volatility can be very unpredictable. So you have to decide what you'd be willing to tolerate and what you wouldn't. I like Nike. I'm going to wait until after the next earnings announcement before I really try to consider and compare where the stock is compared to what my value price is. I want to see how much that does or does not change based on this, whatever this new data is. Whether or not it comes in line with estimates or not, that's really less important to me than what the numbers are relative to where they've been. Are they continuing to show growth? Are they continuing to, is their fundamental profile becoming stronger than it was? If so, then the value price should also be increasing. And if so, then that means that the stock may still offer a good opportunity. So Jay said, I sold a call at 68, rolled it to 70 yesterday before the jump. Okay, there you go, Jay. 1, 2, 3, 4, 5. So you hung on to at least a portion of the premium from the 68. Now you rolled up to 70, and if this positive momentum here continues to hold, then you may have baked in a little bit more capital gain as well. That's not a bad thing, especially on a stock that pays a pretty nice dividend, 41 cents for a quarter from a price where it was in the mid 60s. So very small portion, but the 70 call sold at $1.83. Yeah. So that's if you liked the math, if that worked, so be it. By the way, they just increased the dividend. It's not huge, but it's an increase. That says something. Even when the increases are modest, an increasing dividend means that the company is paying more money from either cash flow from cash and equivalents in order to pay dividends. It's got a larger pot they're drawing from. So it takes they're increasing their distributions to shareholders. That's an overall positive thing. So you got a yield here. It's not huge, but on an annualized basis, it's also not bad. So, all right. Got a little bit of time left. And so what I'd like to do here with the few minutes we have is kind of open it up If there are any other stocks that you are interested in having me review with you and get comments from the group on, please feel free to drop them in the chat area, and more than happy to see what those look like. And sometimes this gives us ideas for some of the rest of us. We might get an idea for trades to place, or even maybe just stocks to follow. Well, I'm not going to lie, there have been stocks that I've added to my watch lists just because some of you bring up stocks that I haven't been following. And that's always fun. So if there is something you would like to share with the group and have us take a look at, please go ahead and post that in the chat right now. Well, while you're thinking about that, let's just go back here to the chart for the S&P 500 really quickly. Your watch list is the market, Gib. I like that. Anything in the market is a potential is a trading candidate. That's fair. That is totally fine. There's nothing wrong with that at all. Okay. S&P 500 is really it's right around its latest all-time high. It reached it in October, and we're starting to approach that level again. There's a lot of signs of bullish support in the market. The 200-day moving average is rising. The 20-day moving average is rising. We're seeing a gradual increase in values here. The resistance is interesting because it hasn't been able to break it yet. I don't know if that means that it's going to drop back. It means that it could. It also means that if we do see a break above resistance, above this level at around, what is this? Probably 69. We see a break above 6,900 on the S&P 500. There could be some momentum behind it. So we'll see what happens and where that goes. Okay, Jay wants to look at PFE. Take a look at Pfizer. It's been building some positive momentum as well. Not as dramatic as the others that we've been looking at today, but it is building some positive momentum. Just to be clear and fully transparent, I'm in Pfizer at a much, much higher price. So this rally is good. It's not gotten to where I need it to go, but that's okay. I like Pfizer for a lot of other reasons. So I can be patient, but here's what the long-term trend looks like. Let's change this to weekly candles here. This is a stock that has been in a downward trend going all the way back. Here's the top in 2021. That was all of this rally here. This was all COVID vaccine related, and the drop since then has been as COVID sales have fallen, and the market is not recognizing just how strong the rest of Pfizer's pipeline is. They were expecting the long-term benefit from COVID sales to hold longer than they did, I think. But it is starting to show some positive momentum. We're seeing a nice upward trend since April from about 21 to almost 26 now. Is it going to continue to hold? We'll see. So I hope that helps. We are at time, so I'm going to go ahead and call it now. Thank you, everybody, for being here and for your participation. As always, it is so much appreciated. If you know anybody that you think is going to benefit from participating in this live stream, please do share it with them. Send them the link and invite them to watch and to join the Rebel Income community. I really appreciate all of you. Thank you so much for being here. I hope you have a wonderful weekend. Send me any questions that you have between now and next week. rebelincomesystem@gmail.com, or reach out on Substack or on Discord. And I'll talk to you again next time.